Welcome to Shortview Trading. It's your morning market hit for Monday, 12th of October. What matters today and this week for traders? Well, markets continue to be dominated in the short term by fear and greed. And in particular, in the last few trading sessions, the last few weeks, markets have been getting pretty greedy. We saw that again with gains on Friday and further gains overnight in Asian trading hours. But it was only 2 to 3 weeks ago that market participants were really pretty fearful. And you'll remember over the course of most of September, markets were selling off in a three-wave pattern. Having topped on the 2nd of September, they sold off through to the 9th, then a relief rally to the 16th of September, as you can see from the chart in front of you now, and then a pullback further into the sort of 21st, 23rd, 24th, 25th of September. At that stage, market participants were pretty fearful, and our models were generating a buy, even strong buy signal. You can see the risk appetite scoring system in front of you now. On the 23rd of September, it reached strong buy. Since that time, of course, we've had very good gains in the S&P 500, and the market is now up about 8% from those lows on the 23rd, 24th of September. But of course, with that, market participants have become more greedy. They've become more confident about the market direction in the short term, and they've been bullied by the price into believing all is well. But at the same time, our models have gone back on to sell. So in our minds, the way our models work is a short-term version of what Warren Buffett likes to say, that you've got to be greedy when the market's fearful and fearful when it's greedy. And of course, the key point here is that the market narrative, the chat in the market, tends to follow the market price, not the other way around. So as prices rally, participants become more confident, the narrative becomes more complacent, more positive, and markets therefore in our minds become more vulnerable. Equally, in the flip side, as they sell off, market participants become fearful and the narrative becomes very negative and pessimistic. And in that eventuality, we tend to get buy signals on our fear and greed models as they start to register the market as fearful. Now, of course, no model is perfect. No trading technique has a 100% hit rate. But what you want is a model and a technique that gives you a high percentage hit rate. That's what these models do. And as you can see, they've been working nicely over recent months, generating fear and greed, contrary signals at the right appropriate moment. As such, the models are now back on sell. That makes us cautious in the near term. Yes, of course, earnings can push a grind higher in equity markets and keep the uptrend going. But equally, there are other risks out there that may come to the fore and become front and center in traders' minds. To see how we're playing this market, please see today's Daily Rag, available to subscribers via the website. So what are we watching today and this week? Well, today it's pretty light on the macro data front. There's some key speakers out there, including the Bank of England's Bailey and Lagarde. In terms of this week, there's a lot going on. Obviously, we'll be watching any updates on the fiscal negotiations over in the States. Added to that, there's an inflation theme across the globe with the US, China and Eurozone all publishing CPI inflation data this week. There's a key data point out of China, which is the total social financing data and money supply data. Very good insight into how strong the economy is likely to be going forwards. And of course, on top of that, the US begins its third quarter earnings season, reporting of earnings over the course of this week and over the course of the coming several weeks. This week, we kick off with the banks, Tuesday and Wednesday, JP Morgan, Bank of America, and so on. And lots of companies coming up over the coming weeks. So that's it from us. That's your morning market hit for Monday, October the 12th. Thank you for listening. Please do subscribe on YouTube. Simply search under Shortview Trading or follow us on LinkedIn, Facebook, and or Twitter. Thank you for listening. Stay safe, trade well.